Welcome to FOMO Consulting for your daily AMC stock analysis video on Saturday, June 5th. Ladies and gentlemen, I believe the gamma squeeze is coming and it could be absolutely huge. I'll explain shortly, but as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel and I would appreciate the support. Let's get into the video. As always, I would like to thank each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you. Let's start with a quote. A fact of life. After Monday and Tuesday, even the calendar says WTF. So, quick review of the broader market from yesterday. All three major indices were up finally. Great day. Dow was up 179 points, Nasdaq up nearly 200, S&P up 37. Tech even had a good day, so it was a great way to end the week. So let's look at crypto this morning. Crypto is down, not terribly, but there is some selling pressure, obviously. Bitcoin, Doge, Ethereum, you name it, everything's pretty much red, as you can see. So let's look at AMC, how we closed yesterday. Overall, I think it was a good day, all things considering. Fridays historically are not the best for us, and I'll show you that very, very shortly. But overall, they had every intention, obviously, to put as many contracts out of the money as possible. A lot of selling pressure, people taking profits. It was just one of those weird days, but I am not concerned whatsoever. I personally believe the indicators needed to all cool off a bit, and we are set up beautifully, I believe, going into next week. So as you can see on the 10-minute chart, going back several days, we were at $12 just a couple of weeks ago. So the run-up we've had over the last 2 weeks has been nothing short of astounding. And I, for one, like most of you, are very pleased at my bank account currently. So looking at the broader picture, 1-hour chart, you can see we needed to cool off a bit. The RSI has now cooled off. We're in neutral. MACD is now in neutral, but I believe we are set up again beautifully going into next week. Keep in mind, this is a hold, buy and hold type stock. We are not day trading. I personally use the longer term indicators like the daily chart. We are certainly very bullish. Alligator's mouth is wide open on the indicators. Moving average is clearly bullish. MACD is certainly bullish, and the RSI, as you can see, has now kind of cooled off, and I believe we are set for yet another run. Bigger picture again, weekly chart, you can see how far we've come over the last 6 months or so. We are certainly performing very, very well. So let's look how GME did. $248.36 was closed, down $9.82, 3.8%. Again, linked to AMC as well as others. We need GME, but you can see on the indicators, everything is still very bullish. MVIS had a heck of a day. Great way to end the week. Had a nice little squeeze or whatever happened. Fantastic if you were involved. Congratulations. BlackBerry has recently came alive, as well as AMC and GME and others. Certainly had the same dynamics in play that GME and AMC had. So no worries. I believe it will recover very soon. Again, GME, just want to show the volatility at the time of the squeeze leading up to wild swings up and down. That's just part of the process, folks. So this is where it gets good. So let me, what I've done here is create a spreadsheet, month by month, day by day, week by week. The big numbers you see at the bottom are the weekly average by date. So for Mondays and Tuesdays and Wednesday, Thursday, as you go through. What you see is on January 19th, leading up to the baby squeeze, there was a huge pop in volume, much like we've had recently, to 249 million. Past that point, you can see the Wednesday and Thursday following pretty flat. Nothing too crazy. The following Friday, huge pop in volume, and then we were off to the races within a week after that. But you also look at the huge volatility on those days of the baby squeeze, 301% down, 56%, so forth and so on. But overall, January was an anomaly, right? What I want to look at as is the normalized view. So after January, you see in February a lot of the fallout from the baby squeeze, a lot of selling off, a lot of volatility, just crazy action, right? But overall, the month of February ended down 7%. But the action leading on the last week of February kind of led us into a normalized March. So let me show you what that looks like. So in March, we became more normal, right? We had earnings on the 10th. But if you look specifically at each and every day, but the average gain or loss by calendar day, Monday, Tuesday, Wednesday, Thursday, Friday, you can see there's a pattern. So on Mondays, as an average, we have 9.3% average gain through the month of March. Tuesdays and Wednesdays were losses or down. Thursday up 5.6% as an average, and then Fridays relatively flat. We've been kind of dealing with this for quite some time, and I'll continue to show you. But overall, March was up about 8.5%. So let's look at April. So again, you see the higher than average gains on Mondays, and then you see somewhat of an ebb and flow of flatness on Tuesdays and Wednesdays. Thursday, on this particular April, which was a rough month. If anyone was involved like I was, it was hard to stay focused, right? As you can see, we had volatility. We just kind of ping-ponged around that $8 to $10 range, $11 range. We just could not make ground. We were kind of in the doldrums, right? But if you look, Fridays have been historically low, 2.3% downslide. So let's look at May. So May was a little bit more normalized, but every week we were green as an average. So on Mondays, again, 5% up. Tuesday, 5% up. Wednesday, somewhat flat at 2%. Thursday, big pop. Friday, pretty flat. So let's move forward into June. So as you can see, what happened in June last week, we had a huge run up, as everyone knows. Tuesday we were up 22%. Wednesday up over 95%. We gave back 18% and down 6% or so on Friday. We essentially gave back the gains from Tuesday. We protected the gains on Wednesday. That's how I'm seeing it. But we were still up 93.28% for the week. But most importantly, if you look at the bottom, I extracted all the information from a calendar day perspective because I wanted to see what our average was over a long period of time. So March through May only, if you look, Mondays and Thursdays have historically been our higher gains. We've always seemed to come around pretty well on Mondays, and then Thursdays, if we have good price action, hold strong. Tuesdays and Wednesdays, obviously market makers are buying shares for options, this, that, and the other, and I think we always see a spike. So again, this is just trend data over a period of 3 months. More importantly, leading into this upcoming Monday, 11 of the last 14, and I'll use this Tuesday as a Monday, 11 of the last 14 have been green, substantially green. 7 of those 14 days have been over 10% gains on a Monday. And a lot of that, I believe, is due to the options activity. How many options we actually put in the money on Friday certainly bodes well for us on Mondays. So let me remind you what a gamma squeeze is. So this is an article I just plucked out of the internet. Fast forward to January 2021, the GameStop short squeeze is in full swing. GameStop's challenging fundamentals haven't dramatically improved, but the stock price is much higher thanks to the short squeeze. That higher stock price attracts even more short sellers who want to profit from even deeper distance GameStop shares may fall. Those new short sellers, in turn, buy more out-of-the-money long call positions or options, to protect themselves from the possibility that its shares will rise further. On top of that pressure, speculators who are betting the stock will continue its meteoric rise may also be buying out-of-the-money call options in the hope their bet pays off, especially if there isn't much time left on those call options because they're close to expiring. The risk-reward trade-off can look mighty tempting. So that forces the market maker on the opposite side of the options trade to buy more shares to hedge, which in turn causes the stock price to rise more. As the stock rises to approach that option strike price, the market maker is forced to buy even more shares as a gamma hedge, and thus you wind up with a gamma squeeze. So I believe we saw some of that this week. We certainly saw some shorts returning their shares, but no doubt I believe we can create one heck of a gamma squeeze this week, if not next, and I'll show you what. So let's look at the options chain here to see if we can gain some knowledge. So we have a lot of open interest and a strike price of $43. Problem is, this is not AMC. This is BlackBerry. Little old BlackBerry has a strike price this week, $43. BlackBerry's been trading in the single digits around $10 for what feels like weeks. It has came alive this week, no doubt, because AMC, GME, and others have woke up. We are all connected, as we all know. But if you look, they've extended the strike prices out to $43, which is absolutely huge. And there's a lot of open interest at the $20 strike and the $25 strike. Again, very, very bullish for AMC, as well as certainly BlackBerry. So let's look at their chart. As you can see, baby squeeze, they popped up to $28, and you can certainly see what has happened this week. So again, I believe we are all somewhat connected. When one moves, like AMC has, the others move as well. So let's look at the short interest trend data here. We obviously know that they have returned some shares, but what we also do not know is if they've actually borrowed in their place. So again, I'm looking forward to going into next week to see how this transpires and see how this trend chart, if they actually did start covering, those trend lines should go down substantially. So quick refresher of the Ortex data. They did return 33 million shares, but we do not know right now how many were borrowed in their place. Short interest is down, but it does not change this scenario. There are still well over 100 million shares on loan shorted. So again, nothing fundamentally has changed. So on Friday, we had 185,000 contracts on the call side expire in the money, and certainly more on the put side. We could be set up for a phenomenal Monday. Very similar to what happened this past Tuesday, which could set up a higher level Wednesday, Thursday with FOMO buying and what have you. Then you get into the hedging and gamma squeeze and what have you. One thing triggers the next, right? It's all a chain reaction, which could in turn set off a short squeeze. So I am very, very bullish going into this Monday to see how this plays out without a doubt. So let's look at the options here. This is from bar chart, and this is the open interest for the next coming weeks and months. So if you look where I have the yellow arrows, you can certainly see the open interest and the call volume from this past Friday, the 4th. The calls far outweighed the puts. Now the puts, at least right now, expiring this Friday, outweigh the calls. And I believe that's a good thing because that means they are preparing for a major rise and fall, which means they're somewhat hedging, right? Long and short. But more importantly, if you look down the line to July 16th, the puts far outweigh the calls, at least as of this time, which would mean they're expecting a large run up and then they fall back down. We'll see how this develops, but I believe this is exceptionally bullish, at least short term. That would indicate to me they are expecting a big run up and then obviously a fall down. So this is one way to kind of look at it. So I've extracted all of the options coming into this Friday, filtered them largest to smallest from an open interest standpoint, and you can see in the yellow highlighted areas where most of the open interest is currently and based on the strike price. So as you can see on the call side, there's an extraordinarily high amount of open interest, $73, $145. Some of that's hedging, but 60, 70, 50, a lot of big dollars, a lot of open interest at those higher strike price levels. I believe that is very, very bullish for us. So let's close with a quote. All I can ask is the chance to prove that money can't make me happy. By comedian Spike Milligan. I think we're all looking forward to having money, and we'll see if we can make us happy or not, right? That's a personal problem. But overall, I think we are set up beautifully for a very green, bullish week based on the options, based on the sentiment, based on the FOMO, based on the just the overall idea that AMC is worth buying and holding for, and I'm certainly in this with you. So as always, I would like to thank you for watching. If you did find the video informative and entertaining, please like, share, certainly comment, and subscribe to our channel. I would appreciate support. But as always, I hope your life is full of green candles, and I will be in touch soon. I'll talk to you later.